Hi guys, my name is Oluwatosin Olasende and welcome to Money Africa's YouTube station. So guys, what is Money Africa? Money Africa is a financial literacy platform that leverages on technology. We educate you about how to make money, grow money, and keep money. Like we always say, it is one for you to earn money, it's another way to keep it. And keeping it is really quite hard, and we're here to help you with that. So today I'll be talking about a very interesting topic. It's about bond. What do you think about bond? The bond we use for our hair, the bonding in a relationship. Which bond? All right, great. Today we're talking about bond. A bond is a financial instrument. Tosin, why are you saying financial instrument? What is that? All right, great. Let's look at it like this. A bond is basically like a debt. So think of this. You have my friend and myself. I'm Oluwatosin. My friend is Chukwuemeka. Chukwuemeka is the borrower. Sorry, Oluwatosin is the borrower and Chukwuemeka is the lender. You're seeing a relationship here where you have a lender and you have a borrower, somebody that is giving, another person that is receiving. So that's basically what it is. It's a debt instrument, for a lack of better words. Now, bonds fall under a category called a fixed income instrument. Why is it fixed income? Unlike of the stock market that we don't know if that particular stock is going to go up or going to go down, with a bond, you know upfront, I'm getting 8%, I'm getting 7%, I'm getting 6%. So that's why they call it a fixed income instrument, because you sort of know, you're going into it knowing roughly how much in terms of percentages that you are going to get. Of course, certain things changes, like what happens in the market in the future amongst others. But for the most part of it, you know that, hey, this is what we are expecting, and then you're able to go into the market with it. Now, bonds are broadly divided into two different categories. We have the bonds that are issued by the government, like you have the federal government, you have the local government, you have the state government. Guys, stay with the federal government. So I don't want to call a particular state in Nigeria that has been struggling with paying bonds, but we usually advocate and tell people to just really, in terms of safety, we would lean more towards federal government bond. Now, why is this important? For the government to default and not pay you, that means that Nigeria is shutting down, and the chances of that happening is really slim. Now, I'm not saying that they've never defaulted. They've defaulted in the past, but this is decades ago, right? So in order for them to default, I'm talking about the federal government, then really the country really has to be in trouble. And that means that the stocks would have been in trouble, commercial papers would have been in trouble, everything will literally be coming down for that to actually happen. All right, great. Now we have the second category. These are bonds that are issued by the private sector. Yes, bonds is not just for government. Private sector can also issue bonds. Remember what we said, it's literally just a debt instrument between a lender and a borrower. There are two parties. Somebody is giving, somebody is receiving, and definitely at a cost, at a price. Fantastic. Now, one of the most popular bonds that is available in the Nigerian space is the federal government savings bond. You must have heard of that. You know, it is issued on a monthly basis by the Debt Management Office. So you've probably heard people talking about the federal government savings bond. Is that a good investment or not? That's a different conversation altogether. I really just want to educate you about its existence. It depends really, but because of the return, I'm most likely not lean towards it. Great. Now, the government also issues something called a Eurobond. It gets interesting. It's a Eurobond, but it is issued in a foreign currency that is actually in the US dollar. And Tosin, does not make sense. Why are you calling it a Eurobond? But in actual fact, this bond is actually then issued in dollars. I know, me too, I'm asking. I understand, I get you. I do, I totally get you. Now, what happens here is that people that invest in this Eurobond, they actually get their returns, interest in US dollars, and their capital is also in US dollars. This is a really great investment in the sense that we've seen what has been happening in Nigeria with regards to the inflation rates, right? Like you're looking at the inflation rate, you're looking at the Naira depreciation, how just about 2 years ago it was about 365 Naira to the dollar, and now we're what? Depending on who you're asking, it could be 420, it could be 740 Naira to the dollar, based on the exchange rate. So the market really, in terms of the Naira depreciation, and this is where Eurobond comes in, because it is issued in foreign currency and you earn your interest and your capital back in foreign currency. Now, Tosin, where can I find it? You can get this from asset management firms, right? So just reach out to your asset management firm and ask them about this product and definitely have it. So the next one you're probably asking is it possible to get an indirect exposure? Because the truth is, for those that want to buy a Eurobond, the entry price usually high. So we're talking about 10,000 US dollars or so. How else can I get entry into it if I don't have a high amount of money? You can get entry into it using something like mutual funds. So there are certain mutual funds that actually have Eurobond exposure in it. Now you're probably thinking, Oluwatosin, why should I buy a bond? The reason why you should buy a bond is because you can actually predict your cash flow. So for instance, if you know that, hey, this bond is going to give me like 11%, it helps me to plan, right? It helps my mind, it's predictive, as opposed to a stock market that I'm not certain what my return will be in the short run, or even I'm talking about cryptocurrency or other assets that is very dependent on how the market behaves. This one helps me to plan. Also, in these times, the bond tends to have a higher interest rate if you compare it to that of the treasury bill. Now, higher is subjective. The inflation rate as of today is the 14th of October 2022, has already hit 20%, right? So even though the bond is giving you like 11.5% thereabout, it's still sort of far from your inflation. Remember, inflation is a thief and it steals from you. So generally, investors are always looking for an investment that gives them a return that is close enough to inflation, right? Because inflation steals from you. So can I get a bond that gives me 20%? I'm also looking for it. We are not aware of a Nigerian bond or a bond that is in the market that can actually give you a return that is just as high as inflation. Now, another reason why people also think, a bond is a good thing to invest in is because it is tax-free. Now, the interest received on your FGN bonds is not subjected to what withholding tax. So this is also like a very good one, right? So it's not subjected to withholding tax, it's not subjected to company income tax, amongst other. It is also traded on the Nigerian Exchange Limited exchange and can also be traded on the OTC. Thank you. Now, what is the down? We've spoken about the advantages like the tax-free, it is easily tradable, it is predictable in terms of cash flow. What is the downside of it? The downside of owning a bond is that in the event of the issuer being under a lot of pressure, let's say something happened, they need an emergency, they have an emergency, they don't have an emergency fund, that is, they have to sell off that bond and get it back immediately. The person might actually have to take a haircut, meaning that you might have to lose a little bit of money, right? So the holders may have to take a haircut, meaning that a lower value than the purchase price, depending on how the market is at that point. And that is why we keep advocating for people to invest in a long-term approach, so that you are never under pressure to sell it earlier than you anticipated. Did you understand what this means? Can you explain to me in layman terms what a bond is? Let's just do a quick recap. A bond is a debt instrument that is between two parties. Somebody is lending, another person is borrowing. There is always a cost, that is, there's an interest income. So the person that is lending, right, the person gets to earn an interest income. The person that is borrowing, the person gets to have an interest expense. So in this case, we are the ones lending. We are lending to the government, or we are lending to private institutions, so we get to make money, so we get to make an interest income. And then we spoke about how it is tax-free, we spoke about how it is predictable. I already know that it's this certain percentage. We spoke about the different types. We also spoke about the Eurobond, that is issued in foreign currency, especially because of what is happening with the naira depreciation in the market. We are your partners for everything money and knowledge. So if you want to know more about, questions about the Eurobond and things like that, please come into the comment section. We're here for you. We've got you. Subscribe, click on our subscribe button and join our Money Africa's YouTube community if you have not joined us. And do not forget to share this video. My name is Oluwatosin Olasende. Thank you for joining us. Take care.